All right, so we will get started now, and I thought it would probably be helpful to catch everyone up with some news about Meta or Facebook first, because a lot has been happening. So I think the first one is if you just look at the 5-year stock chart, Facebook has had dips before, but a lot of people you guys might know this by now, but this was the largest dip of any stock in terms of just like market cap ever in history, something like 200 billion. So a pretty big dip, and Facebook is one of my largest holdings. And so I didn't really see it coming, and I'm curious myself to just know what is Facebook's intrinsic value. And so that's the purpose of this video. And we'll see what comes out of it, and maybe I'll be less or more bullish. So we'll see. And I think what will also be helpful for you guys to see is this is something that not all companies, but usually the really big companies, they provide an earnings presentation each quarter. And Facebook, obviously a huge company. So just looking at the quarters, you can see that the last quarter was actually not bad when you just look at it from a pure numbers perspective, right? The quarter went up in terms of revenue 20% year over year, and it's been going up over the past year. So you might scratch your head and be like, oh, why is the stock down like 20%, which we'll get to. This is just all a bit more segmented data. Expenses also didn't go up a crazy amount, so that's not why the stock dropped. Tax rate, something we'll use later. Net income, this is quarter by quarter. So net income did fall, but a lot of people actually expected this because Facebook is investing a lot into the metaverse. And so this didn't actually come as a surprise to investors, or it shouldn't have. So Facebook's net income being lower is not really a huge deal because the company's investing a lot of their cash. Capital expenditures also going up. This is the cash you spend on plant, property, and equipment. This, as I kind of mentioned, is going up because Facebook's investing in the metaverse. Let's just skip through a few of these and get to the important slide, which is this one. So Facebook daily active users fell from 1.93 billion to 1.929 billion. Also doesn't sound like a huge deal, but Facebook is or was more of a growth company for a while, and people or investors are now pretty worried. Is this a company that's now officially on a decline? And that's what really caused the stock to really plummet the way it did. So that's kind of the overview of what's been happening so far. And so yeah, you can see here Facebook Meta platform slid 18%. Another important thing to note here, actually let's go, wait. All right, here it is. Dang it, why does it keep doing this? I'm signed in. Okay. Right here, 3 to 11% is what the company projects their year-over-year growth to be for the first quarter of 2022. So they expect 3 to 11% year-over-year growth, which is really, really small, especially compared to what Facebook investors are used to. So the reason for that also is because they named 3 reasons, but I think the first two are really the important ones. The third one's not really that important, I'd say. So Apple made a lot of iOS changes, privacy changes that's causing ads to not be as effective on iPhones. And then second, there's going to be a lot of supply chain issues, which is an issue kind of because of Omicron and everything. And the other thing that was mentioned during their call is TikTok, which they mentioned a few times. There's competition, blah, blah, blah. So anyway, that's the backdrop of Facebook, and now let's just go into the model. So I'm also going to put some timer notes here just for myself, so I can add timestamps later. Sorry for interrupting this. All right. overview finished. Model starts. Okay. So the last time I updated this model was on October 31st, 2021. And last time the price was at 323 for the settings that we had it at. So revenue growth was optimistic and everything else was base case. The implied price was 447, which is pretty high. So I think what probably will happen is that with the assumptions changing in the model, we'll get to a much lower number. And so, I mean, I'm just gonna start really just working through the model and, as I do this, I'm not gonna be answering questions until the very end. So if you guys have questions, feel free to ask them in the chat. I'll periodically maybe check every once in a while, but last time I tried to answer questions while working, I got just very distracted. But I will kind of talk about what I'm doing. So these figures that I'm going to be pulling from are from a resource called Visible Alpha. And what it does is basically just by putting the most recent date, it'll pull the information here. So for example, right here it says October 31st, 2021, and the Q4 2021 for Facebook, which just came out, was not available a few months ago. But now if I change this to the date here, then everything should refresh, but it's not doing that. It's weird. All right, let's wait for it to refresh. I guess these numbers didn't come out yet. All right. Well then, let's try this one. Okay, so yeah, here's an example. So I changed the date, everything's loading, and these numbers are going to refresh and populate, and then so now we have like fresh numbers to look at. But anyway, this is, I don't think I'm going to use actually any of these tabs on the right here. I'm only really going to focus on the annual ones. Yeah, the DCF I'm building today or updating is going to be pretty high level. It's just going to be for like a general sense of what valuation should be. I'm not going to do like a revenue build or anything like that. All right, so it has been a while since I worked on this, so let me remember. Okay, well, what we first need to do is, beforehand, our first projected year was 2021, but now that 2021 has passed, we need to make that an actual year, and then everything from 2022 onwards, and then to 2031. Oh, I think everything's not, sorry, my settings are not correct, I think. That was weird. Okay. Okay, so I'm updating. So these numbers were from FactSet, and okay, so these are street estimates of what the street thinks that Facebook's figures should be. And I'm gonna just start with this row here. So we're at 2020. This is being linked to my income statement, and I probably should go over these briefly so that everyone's on the same page. But this is this is Facebook's / Meta's income statement, historical figures, and this is their cash flow statement, and then this is another version of their income statement. I think it's more of like a summary, and this is more detailed. But what we're basically just doing, the green means it's linked. Oops. So if I copy paste this over here, it'll link to this figure right here. So, all right. So basically what this says is that Facebook grew by, did they grow by 37% in terms of revenue? That's a lot. I guess so. And we can just double check that on their most recent filing. All right, so revenue 117.9 billion, 85 billion the previous year, and that's what we have. So, okay, Facebook grew by 37% in revenue, which is actually surprising. It's a lot. And the street estimates that revenue is going to be growing by 13%, like, so the growth rate is shrinking to 13%, 17%, 13, 14, etc. These are highlighted because I went over in the last stream, but as you go out in the years, there are less analysts that are looking that are projecting out figures for the company, and so it becomes less reliable the more you look out. And so I think I marked these four as not as reliable, but let's just jump into FactSet and then double check to see how analysts are projecting Facebook's revenue. So this is FactSet, something I use a lot at JP Morgan. And let's go to Facebook here. Let's go to estimates, all estimates. No, sorry, Broker Outlook. Facebook is also changing their ticker to Meta pretty soon, by the way. All right, so let's see. Right, so you can see here 2022 estimate for sales. A bunch of analysts are projecting, right? And then for 2023 also, and then all of a sudden in 2024 and 2025 they drop off. So that tells me 2023 pretty reliable, 2024 not really that reliable. And also what might be interesting for all of you to see is the targets and ratings. So we can see here what the street is estimating in terms of share price for Facebook. So a lot of these might not be fully updated after the quarter. Actually, it looks like February 3rd. Maybe it is. But anyway, you can see that their target prices are on average 330. And so yeah, around 300 to 350 seems like to be what the street is estimating Facebook's stock should be. And Facebook stock's right now at 220. So the street thinks there's upside. Oops. Okay. So then cost of goods sold, we can probably also just link to. And this can also. Okay, costs. So I'll update everything, and as I do, I'll just point out if anything looks different or worth talking about. For cost of goods sold, seems like it's pretty flat and nothing really concerning at all. Gross profit, 81%. I mean, Facebook is still, at least as of now, a great business. 81% gross margins. It's great for any company, and especially for, or it's great for any company, basically. All right, so then we have marketing and sales. That didn't really go up much. R&D didn't really go up much. G&A didn't really go up much. 8% of sales, 21% of sales, 12% of sales. And let's see what, okay, total operating expenses actually looks like it went down. Okay, now EBIT is something we can actually calculate, because we have EBIT is your earnings before interest and taxes, and all it is your gross profit minus all your operating expenses, which we have here. So we can actually calculate this. Let's see. So the street was estimating, the last time I built this model, it to be 47 billion. So, and in actuality, it came out to 46.7 billion. So off by around 600 million or so. And let's see if this is updated automatically. Okay, interesting. So before, when I built this model, everything, or the EBIT from the street was 49 billion for 2022, 58 billion, 67 billion. And then now with the latest quarter, with less sales and less, more capital expenditures. Actually, capital expenditures doesn't affect EBIT, but more investments in probably employees and more marketing maybe. I'm not sure exactly what they're going to be spending more on, but as they go into the metaverse, they're going to be increasing their operating expenses. So that probably, with less sales and more expenses, is what's causing the EBIT to decline so much more than what the street had projected before. And Facebook this past year was at a 40% EBIT margin, which is very, very healthy. You can see that over the past, it looks like 2016 to 18 was kind of like Facebook's peak. But 40% is still very, very good. Honestly, 30% is still not bad. Okay, and then let's go to interest and income. This is not really that important because it's such a small figure for Facebook. I don't think they have any debt. Taxes. Okay, just double checking that. All right, so net income. Why is this? Oh. Okay, net income 33%. That's also that's a healthy number, but it also really, valuation and everything also is really depends on what the future holds. It's not really about like what's happened in the past, because you have great companies like IBM, for example, and no one really would say that IBM is like a slam dunk investment now, right? So I'm gonna unfreeze these right now so that you guys can see more of the Excel for now. Okay, so where were we? Net income is at, okay, this is where we were. Okay, net income 33%. I also want to double check this figure. Make sure I'm doing things correctly. So this is Facebook's income statement. Net income 39,370. 39,370, perfect. All right, now let's keep going. Cash flow items, I need to update this for the 2021 figure. These are all need to be updated as well. Okay, so DNA as a percentage of sales, not really changing much. Percentage of CapEx, pretty, let's see. Well, I guess they're relatively, I don't know, they're not super reliable basically, because the numbers are kind of all over the place, and who knows what will really happen in these later years. But I guess helpful to just kind of have it for context. Capital expenditures, I think this does make sense, as I guess DNA might also make sense too, but Facebook's going to be using a lot of cash and capital expenditures over the next few years for the metaverse, and then eventually as a percentage of sales it should drop over time, unless Facebook invests in something else. Okay, so now what we need to do is project out our years, and let's start by, okay, so what we did previously was what we started off with let's see. We started off with our base case being what the street projects for the first year, and then we lowered it down to a certain target rate, and that's what we did for most of the assumptions here. So basically just need to kind of like clean everything up. And so yeah, let me just do that kind of one by one. So now this should just be linked up here. So this should copy paste there, and this should be copy pasted. This shouldn't do anything. And then this is where everything should really start in terms of our projections. And I think I want to be a little bit more conservative than last time, because Facebook just said that they're going to have 3 to 11% for the next quarter, right? Which you can find here. And that doesn't mean the entire year of 2022 is going to be at 3 to 11%, but from 11 to 15%, which is what we had last time, given that the next quarter is 3 to 11%, this seems pretty optimistic. So let's, I'm going to actually freeze those panes again. Okay, so all right, let's think about what to do here. So this is 13%. So if the next quarter is 3 to 11% and the street is estimating 13%, that means the street thinks that there's still the following few quarters will have higher growth, which may be possible, but I feel like who knows what'll happen next year. And so if we maybe I'm trying to think about if we should use a smaller figure. I think it'll be easiest to start with our conservative case. So I think for 2022 next year, if 3 to 11% is the range they gave, then I think for the next quarter, then I think 3% is super, super conservative, but I think it makes sense to use the figures that management gave us. And then for 2022, so growth was 37%, dropping even to 15% is kind of a lot. I'd say if we maintain some optimism, let's say that Facebook is able to somehow manage 20%, and also Facebook's management is known to be more conservative in terms of their estimates. So I think a range of 3 to 20%, and this is not gonna, while this is a huge range, this is only 1 year of our projections. So I'm gonna keep these assumptions for now, and then we'll see how everything turns out if we need to make some changes. Okay, so then next for 2023, the street is estimating at 17%, and who knows, maybe then they haven't fully updated their models yet, so that's why it's so high. But I want to keep this with the street case for the base case, and then for our 2023 revenue growth here, it's growing from 3%. Let's call it something like Facebook is able to get its act back together. Let's call it like 5%. And then what it's doing here is ramping. And okay, so I know this is growing to 3 and to 5%. These are super, super low. I can't imagine Facebook only growing by 5%, given that it grew by 37% in 2021. I do think these numbers are actually way too conservative. Man. So they gave a range of 3 to 11%. So 3 plus 11, 14, divided by 2 is 7. So in between that 3 to 11% is 7%. So I think I'm going to just go out on a limb and say that Facebook is going to be able to reach 7%, because 3% revenue growth for the full year, I just find it hard to believe. So let's keep that actually at 7%. And then if things drop a little bit more, let's call it by another percentage to 6%. This is using street estimates as at 17%, and this is at 19%. Okay, so this is just slightly, I guess, a little bit more optimistic, but I feel relatively comfortable with the range. So who knows what everything will actually turn out into, but at least we'll get a valuation range and we can see what we're comfortable with at the end. And then again, this is really high level and we're not going to be building out anything that really like is segmented data, but it'll have to do because I just want an overall understanding of what Facebook's valuation should be. All right, so for our conservative case, I think it makes sense to make this 0. I mean, even Apple is still growing by a few percentage points, but let's say that Facebook just gets destroyed somehow and it goes all the way to 0. It's a worst case scenario, but let's see what our valuation will be. For our 2031, for our base case scenario, so the street has it at 17, 13, 14, 11, 10, 17, 15, 13, 12, 10, 8, 7, 5, 5. Oh wait, I do need to fix these formulas too, actually. So this is just linearly ramping things down, very simplifying, very simple analysis, or a very simple ramp. Okay, so base case 15, 14, 12, 11, 9, 8, 6, 5. I feel comfortable with that. I actually think this is like a realistic outcome for Facebook. I don't think it's like super optimistic. And let's see, these figures growing to 8%. Since there's more headwinds that management's seeing, let's grow this down to 7%. All right, so we have our revenue growth now. Okay, now let's go into our EBIT. And this, again, can just move out. And then for EBIT, it's Street's estimating 32%. Pretty much just saying, okay, Facebook's EBIT is going to be around 32 to 34% for the next 5 years or so. So I think what we can do, EBIT figures are a little bit more steady. So like, as you can see here, well, I mean, this is, when you look back long enough, it's not that steady, but at least for the past like 5 to 7 years or so, you can see it's around like 35 to 40 something percent. And so I'm not going to worry about this too much, but I do think we were a bit optimistic with our EBIT last time. In our base case scenario, we have 31%, 32%, 33%. I think for the next year, that's reasonable because the street thinks 32%. Let's say they do a little worse, then it's 31. Say it's a little better, then it's 33. And then, although I would kind of like a broader range actually. Yeah, I think a broader range would be better. So let's make it 30% and then 35%. Oops, sorry, I meant 34%. And then for the following year, I think we can just keep it flat actually. Yeah, and then this is where we probably need to make some changes. So here, let's think that Facebook's investments keep just going into the metaverse and there's not really an increase. So it's just pretty much flat, which probably won't happen. But again, it's all about our range. And then for our base case, let's be a little less optimistic, but have it grow to 34%. And then for our optimistic case, let's say things go super well, and they have like a Smash Metaverse product or something, and then that grows to 38%. All right, so now we're going to our taxes, and we are almost kind of done. So let's get rid of that, and then yep, we have our taxes. And we actually looked earlier on the tax rate here. Effective tax rates set 19, 13, 17, 17%. So seems like the tax rate should be something around like 18%. And that's roughly where we're at. And I think 19% is like a good base case to have. And for, well, actually, let me take a look at those figures again. 20, 16, 16, 4, 14, 17, 17, 13, 19. Let's just make it 18% for our base case. And then for our, yeah, I think it'll be around 18% again the following year. Facebook also mentioned that they expect their tax rate to be similar. So I think that's fair. And then in our conservative case, what we are implying is that in the next presidential election, we have a more conservative president, and then they increase the taxes to 30%. And then we have a super optimistic case where it gets lowered to 15%. But for me, I'm going to just roll with the base case / street case, because I think that's like a bit of a safer bet, I guess. Okay. Oh, I didn't do this. I didn't finish this out actually. Okay, so I need to fix these formulas again. Yeah, so these are ramping up. And then this I should just be able to copy paste. Oh, what's happening here? Huh. All right, so we have our earnings before interest and after taxes. We're almost there. All right, so these figures, I remember last time were also a little weird. So let's see how close we were. So 7.9 billion is what we had before, and this time it's 7.9 billion, so that's pretty close. And then CapEx 18 billion, 18.5 billion, okay, that's also very close. And then change in net working capital, very different. Change in net working capital for Facebook has been super hard to predict. All right, and then how did we get these figures? Okay, so we just took from the street, percentage of CapEx, and these I guess we are just ramping up to a more normal figure because we want to get to something like, we have 77%. I think this is fine. It's not gonna make a huge difference. So basically your D&A should ramp up to your capital expenditures, and that's kind of why it's also increasing, or that's what the street thinks as well. Yeah, I'm not gonna worry too much about those numbers. All right, so that's 16%, and then our CapEx goes up to 22%, 19%. Okay, and then our capital expenditures just around 15%. It's taking the average of the previous 3 years. I think that's pretty fair. And then change in net working capital, we're using an average of the previous 5 years, but since it's been a year now, let's just This is also a very, very like simplifying assumption, but shouldn't make a huge difference in our model. Oh, I need to project it out. 86%. Wow. Okay, that's probably unreliable. Okay, I'm just gonna do what we did before. So it should be Y. Okay. Should actually be red. Okay, almost there. Okay. So we have our cash flow. This is not correct. Oh, that's weird. All right, something's off. Okay. It should be on P. All right, so sorry, I've just been working on this and I haven't been saying anything, but all right, so we got our unlevered free cash flow, which is really simply just your earnings before interest and after taxes minus your capital expenditures and change in net working capital and adding your depreciation and amortization. And sorry, actually that probably wasn't simple. That's the formula. But more simply, to understand it, it's basically just cash that a company generates, and you can freely use it to, in theory, on whatever you want. That's why it's free cash flow, and you can use it to invest in your company with capital expenditures, or you can pay equity investors through a dividend, blah blah blah. But essentially, it's just a value that you use that to essentially figure out what the value of your company should be. And we also have this metaverse valuation thing here. So this is also, I actually want to build out a case for this, where if it's successful, Facebook's metaverse should have some value, right? And let's just build out a case for the metaverse. So we're gonna need, let's see. We're gonna need a switch for the metaverse. Okay, so this is just going to be super high level, but what we assumed last time was that Facebook's metaverse, the value of it by 2031 or 2030 would be 250 billion, which I think is, considering that right now Facebook is valued at 600 billion, and you also have to factor in that companies' market caps grow over time if they're good companies, and you know, like Apple's at like 2 trillion. 250 billion is also with like inflation. It's not out of reach if it's successful. I'd probably say it's actually pretty conservative. But let's just have different cases depending on, because you don't never know what will actually happen. I'm just gonna build it out on the right here. It's easy. So conservative, and then this is pretty like I don't know how to describe it, like a not not the best way to do it in terms of where I'm building it out, but I think it'll be fine. And then a Zuck case, right? So, all right, 250 billion for, all right, so we now have to just think, what will the metaverse be worth in a bear case, base case, and a optimistic, we're calling it the Zuck case. So if we imagine but in 10 years, Facebook's metaverse, everything just like goes to crap and it's just a complete kind of like failure, I think it would but assets will have been built, right? And there will be investments. And so the company will always be able to at least sell the assets for something. And so I would say that there's going to for sure be some value there. And I think 100 billion would be still a bear case. Like if you were to say to Zuck, hey, in 10 years, your metaverse is going to be worth $100 billion. I think he would be like, I really hope that's not the case. So let's assume the bear case, 100 billion. And then for base case, I think 250 would have been fine. And then optimistic case, like who knows what that could actually get to. I don't want to get anything like too crazy, so let's just call it 500 billion. Because I'm sure if in a super blue sky scenario where everything with the metaverse goes the way that Zuck wants it to, then I'm sure it could get to like $1 trillion, right? Like everyone's living in the metaverse, and you can now just like you can like put on clothes in the metaverse and buy it, and then Facebook takes a cut of that, and they are like own the office or office metaverse because everyone's like going and plugging in there, blah blah blah. But let's keep it at 500 billion. And this, let's just have formula. So let's go to our switch, metaverse switch. I'm gonna call this metaverse. Let's call it meta. Choose meta. So this will just make it so that we can toggle between the cases. But we need to discount it back to the present value, which is what it's doing here. And we need to get terminal value, which is already being calculated for us through the formula. Just double check everything though. Okay. Oops. All right, so that's fine. Gets us to our enterprise value, 800. No debt. Okay, so we gotta check Facebook's balance sheet, and they currently have 16.6 billion in cash and cash equivalents, 31 billion in marketable securities, and no debt. So 16,601 plus 31,397. Okay. And this is a comment that just, oops. All right, that gets us to our equity value of 966 billion. diluted shares. We're gonna have to go back into FactSet. And we didn't change our WACC or terminal growth rate yet, so this is not the final figure yet. But so far actually, I'm actually very surprised at how the number is, how high the number is. But we'll change up our assumptions to what I think makes the most sense, and that'll give us our actual share price. Okay, fully diluted shares 2821 went down. I think it went down because Facebook implemented share buybacks, so that's where their number of shares actually went down. So now let's change up our assumptions here. Facebook current price at 219. Let me just double check everything here to make sure it looks okay. So our WACC, I think we should increase our WACC just because, and Facebook is now entering into some more riskier plays with the metaverse. So I want a broader range for our WACC. So I'm going to call it 11% for our conservative case, 10% for our street case, and 9% for our optimistic case. And this should not be here. Terminal growth rate. Let's do 2%, 2.5%, 3%. Okay, so all right. I think I feel most comfortable with going with the base case for everything, and that right now implies Facebook's share price to be $281.09. So let me also write down when we got here. So 49.25. 25. Interesting, very interesting. So let's see what this says. This says that there's 28% upside. That's if you believe that Facebook, let's go through what this really means. And let's see if maybe some of my assumptions are maybe need tweaking. But okay, so let's go through DCF here. Okay, so this is assuming Facebook is able to grow by 13% in 2022, then increase to 17% the following year, then it goes down to 5%. So that's, I think maybe this is where things are a little bit on the optimistic side actually. So if it grows by 13% and it grows to 17%, I think we actually probably should change that. Oh wait, that's what the street thinks. Interesting. Okay, but let's see what would happen if in our if the revenue growth does not really go back up the way that the street thinks. This actually is very telling too. So if we change our revenue growth to something where Facebook's revenue is pretty much no longer increasing, then Facebook's implied share price is at $160, which is, 27% decline from now. But I actually don't think that Facebook is going to get destroyed this much. I would imagine that Facebook goes something more towards the middle between our conservative and our street case. So if our conservative case is at 160.03, and then our street/base case is at 281.09, if we average those out, we're at 220, which is what Facebook's currently at. I think what's really important is just seeing how Facebook does in the next few quarters, and also seeing how Apple's changes, if Facebook's able to overcome Apple's privacy changes by building out its ads to better target iPhones in particular. If they're able to accomplish that, if they're able to somehow slow down TikTok through Instagram Reels, then that's where you would start to be very bullish on Facebook, because if they're able to even achieve what I consider pretty slow growth compared to their history, there's a lot of Facebook upside left. But if Facebook really is on the decline, then there is substantial value to be lost by Facebook. And I think these other assumptions that we have here, I think might be interesting is if we make a conservative case here. Let's see. I think, yeah. So let's say that Facebook is able to get to the conservative case of the metaverse, and we keep everything else kind of base case. Facebook's at like around 260. So, I mean, I think on a pretty conservative basis, I feel fairly confident to say that Facebook's worth, with what we know today, around $220 to $260. And that's being on the conservative side. If you have more like insider information, and I talked to one of my friends who works at Facebook, he's still pretty bullish on the overall management, and he's like I think a engineer manager there. So he's not super high level, but he's still pretty bullish, if that helps at all. But I think what's really just important is keeping track of what Facebook does over the next few quarters. And we can also, I guess, see what things look like if everything is on the optimistic side, $511. And if everything is super conservative, we have $105.03. So yeah, that's pretty much the model. And now if you guys have any questions, I'm happy to answer them on the chat. I'll just look through right now and see if there were any. I won't scroll all the way up though. I'm looking to see if there's any questions. All right. I don't think there's that many questions. It seems like there's been some dispute going on, so I'm not really sure what's happening there. But I guess for Tesla part 3, I will probably do that maybe in next month or so. Would you ever apply a discount for extrinsic factors such as Facebook's shitty reputation? Do you think that they will overcome like Microsoft did in the 90s? That's a great question. I think that is a huge issue. And well, for now, Facebook, like what I personally think is going to happen is that Facebook is slightly being conservative in their guidance, and their next quarter is going to be a little bit better than what people think. And also with supply chain issues being solved over the next 1 to 2 years, what that really helps with that helps a lot with e-commerce in particular, and that should help with Facebook as well. So there is the chance that Facebook, their ads, if you're like a business, because I used to use Facebook ads as a business owner as well, selling like clothing, and Facebook ads are the best tools that are out there. And so if they start to continue to become more effective, then I think Facebook's cash cow, which is like its ads platform, will continue to do well, and over the next year we'll probably have a better few quarters than what people think. So I would say that it is a little bit more on the contrarian side, but I think Facebook is still a buy right now at these prices. Like I think the downside risk is not as great as what people fear. But in terms of the reputation thing, I do think that is one of the bigger overhangs. I think like more than Apple's privacy changes and all that stuff, I think Facebook's reputation will continue to be a bigger issue, because at the end of the day, if people don't use Facebook products, that's what will really kill the business. And with its reputation right now, it's going to be hard for any new products to become successful. So those are kind of things to, I guess, balance, I guess. Are you able to do this kind of analysis before JPM? No, I didn't. Awesome stream, didn't watch from the start. How does switch tables work? You just change the numbers and the formulas here should automatically, so let's see, showing an example. So this is using an offset formula where if you can look up what offset does, but essentially when I change this to 2, then the figures here change. If I change it to 3, it'll just pull from a different row. Next question. When do you think the reality lab will break even and become main source of revenue? Yeah, honestly, I'm not too sure. It already is producing revenue, but it's losing money. I think the last time I read it was something like 700, 800 million in revenue and losing like 2-3 billion, but don't quote me on those figures. Can I explain how I got the CapEx and DNA? Yeah, so this is just kind of more corporate finance theory, but DNA should ramp up to around, it really depends, but around 70 to 80% of your CapEx. And that's because the two are so related and interconnected to one another. When you invest in plant property and equipment, that depreciates over time, usually by an even amount over X number of years. So if I buy a if I buy an office building for 100 million, depreciate it for 10 years, then that's 10 million a year. And look for the capital expenditure. So that's how those two are related, DNA and CapEx. CapEx, you can just estimate as a percentage of sales. And looking at Facebook's history, especially as the company is growing larger and larger, you don't really expect CapEx to be going up a lot. So that's why it's kind of like declining based on street figures, and then it just stays flat. All right, next question. Why don't I use mid-year convention? Too lazy. Maybe I'll do it in a future stream, but that is something that I should probably do. I don't think it wouldn't really change the model by that much. And mid-year convention, for those who don't know, for the cash flow figures here, what it'll do is instead of taking the cash at the end of the year, it'll assume that I'm taking the cash in the middle of each year. And basically it'll just won't discount these figures as much, and you'll have a slightly higher number. So will Facebook shrink? I think that is actually something where you'll need to base it more off of qualitative information. I think whether or not Facebook will shrink will not really depend on these numbers that I showed today. This was just to kind of see like a rough overview of what Facebook's valuation is. Personally, I would say that holding on to or buying into Facebook at today's price would not be a bad bet. I think the price right now, it will likely recover, and the overhang on the stock will kind of get lifted over time. That's just because I think it has the best ad platform. I mean, what you can compare it against is there's Twitter, which has a really bad ad platform, and it's also very messy as a platform, social media platform overall. There's Snapchat, which I would say would kind of decline over the next 5 to 10 years, although it's been doing well recently. And then there's TikTok, which is doing super well, but the ads platform is not yet structured. I would say that's the main competition. Then there's Google, which is actually significant, but it's not as interactive as Facebook and Instagram. And then there's Pinterest. I don't think it's a huge issue. So Facebook is still very, very well positioned. It's just that they need to have another great product in a sense, like the Metaverse. And I guess that's what they're really going for. I think Mark Zuckerberg gets a lot of hate, but he's still a very, very good CEO. And so I think the company is worth a bet at this price, basically. All right, Neo, I don't own Neo, so I don't really care too much for it, to be honest. Any alternatives to FactSet and Visible Alpha? Nothing that, oh, there is one. I think it's called like Sensio. It's something like that. And I think it's relatively cheaper. It's something probably within the hundreds of dollars per month range or less. Okay, do I think monopoly lawsuits have any bearing on their last earning? I think Facebook declining so much in market cap actually helps them with the whole litigation issue because they're a much smaller company now, right? So I would say the antitrust stuff probably has declined slightly, but I haven't been really keeping up with that too much. Tax rate, we previously looked at what Facebook was paying over the past few quarters. So here we can see 2016, 4, 17, 13, 19. So that's why I just used 18%. Stream where I make a 3-statement model. If there's a need to do it, maybe in the future. But I would say I'm also pretty rusty. I don't even know if I could really do a great job, to be quite honest. I could if I brush things up. For modeling for something like this, there's something called Financial Edge, and I work with them over the past 6 months or so, and they have courses built by the instructor who taught me at JP Morgan for training. So feel free to check them out. There's a code. You can use rareliquid25 to get 25% off. There's a link to it down in my description below. And so yeah, I think that concludes the stream. I think overall the punchline is that I think that right now with Facebook's share price at 220%, so let's make all these our base case again. If we use our base case, there is like about a 28% upside. If we're on our more conservative case with less revenue growth, which I think is super conservative, that's 160. If you average those two, that's around 220, which is what Facebook's at currently. But I personally think that Facebook will recover in the future. Their management team will find a way out of it. So I think at the current price, it is a decent bet, but it's not something where I feel so confident in that I would I would recommend like this is a surefire bet for everyone. So maybe like a small allocation to your portfolio, and yeah, I guess that's it actually. So yeah, that concludes the stream. Thank you all for joining, and I'm streaming Shopify DCF because I'm curious about that company as well in the next few days. So hope to connect with all of you guys on there. See ya.